Let's wrap up this deep dive into EMX, one of my own largest holdings of listed stocks in my portfolio of listed stocks. So to summarize the EMX case, what this gives you is exposure to gold and gold demand and gold prices. In order to be interested in EMX, you really need to be positive to gold. You really need to believe in it and want gold exposure. However, it's not a pure gold exposure asset. It also has more or less equal findings of copper mainly. So this is a mixed copper and gold exposure asset. The interesting thing with it, which makes it much more interesting than just simply playing a gold ETF or even a gold index like the GDX ETF, is that you get a lot of automatic growth by buying EMX, since they have this royalty streaming setup where the cash that they produce can create new assets in an exponential growth style. At least for many years to come, they should be able to use this for exponential growth. And it's an asset light exposure. If you buy the GDX ETF, the gold miner ETF, then you get a lot of asset heavy mining companies. What you really want is just take a look at the history of Franco-Nevada and you'll see what EMX has the potential to become, just because it's asset light. That is, and there are lots of examples of other companies in other industries that are also asset light in a way that makes them with time prove how valuable it is to be able to grow quickly without having to do physical investments. So you get gold exposure with automatic growth with an asset light setup. It has no debt, no net debt. So actually they have potential for acquiring new assets using debt. So there's actually one more potential growth avenue here that they haven't used yet. And that might also be why they're still pretty or surprisingly cheap. Another reason that we can see this $100 bill just sitting there on the floor untouched is that it's a very complicated value composition where they have hundreds of assets. They are not producing anything in terms of cash yet, except for the 5 big ones. It's difficult to get enough information of each one of the 200 ones. But if you do put in the work, and going through the last, let's say, 100 press releases from EMX, you can see that each time you go through any one of these small assets, you will see that it has the potential of being worth 10 to 20% of total market cap, just any of these obscure little finds that they have, that they sell to another mining company to take care of it and to develop it and get it into production within, let's say, 5 to 8 years. That's what's super interesting, that I can't emphasize enough, is that each one of 3 of their top producing assets, including Timok with just 15% of total revenues in Q1 2024-5, should be worth more, sometimes multiples more, than the entire market cap of EMX. And that is given flat metal prices, so not including my expectations of at least another 15% price rises per year. So let's keep that in mind for the final CAGR summary. Another thing that did hold the share price back for a while was that they scrapped their dividend just as they came into a cash flow positive phase, and they had promised to start paying dividends as soon as they became a cash generating company, but instead they just scrapped it, which made the market gripped by fear. But what they did, and they have explained this extensively, is that instead they wanted to buy back their shares at less than half of their net asset value, simply because that would be at least twice value generative compared to just handing out the money with no extra value creation. So instead they chose to buy back their own shares at about half or a third of their actual NAV, and possibly much less than their actual valuation. So let's say they bought back shares at 2 to 3 Canadian dollars, whereas they were worth like 10. So coming down to the return potential for this stock, well, we, as typical, we have this F times V equals P, and the total CAGR is a sum of how much will fundamentals rise, how much will valuation rise, how much dividends will they pay each year. And so we haven't really put this into detail, but we've talked about the valuation multiple being less than half of Franco-Nevada's, and that should definitely be able to double over the coming 5 years. So a doubling of the valuation multiple from 10 times sales to 20 times sales, that means more than a 15% per year increase in the share price. Revenues, well, those should definitely at least double in 5 years. Just looking at, for example, one of their top assets that went from 5.2 to currently a level of 6.4. That's about a 25% increase year over year. And that's a type of level we should expect in some of these larger assets. That is, of course, including the current rise in metal prices, so things get a little bit complicated here. But in terms of volumes, we should see at least 15% increase per year from their asset portfolio. So we would get a 15% per year from the valuation multiple doubling. We should get at least a 15% per year in terms of royalty stream volumes. And then I would say that actually what we also should get on top of that is about a 15% per year in terms of actual underlying metal prices, also doubling every 5 years. So as in my summary here, I put in just 2 of these doublings for a 30% CAGR, and not really counting the potential of dividends or share buybacks. But you should put in actually here a third 15% per year CAGR factor in terms of metal prices. And that would take us to a 45% per annum total return. This makes it pretty easy to multiply in your head, because you have actually 3 doubling factors. So you have the valuation multiple, you have, well, I've called it revenues, it's actually really volumes. And then on top of that, you have the multiples. So you have 3 2x factors, which should or could, I think it's at least half likely that they will get to an 8x share price in about a 5 years time. And if they don't, then I sincerely think that Franco-Nevada would try to buy EMX in total, because it would simply be too cheap for them to pass up. I've also just included here for a quick overview that all their exploration projects, just to tease a little bit about their total potential. But in any way, the potential for doubling valuations, doubling volumes, and doubling prices for a total of 8x return should be pretty enticing for anybody.